In the labyrinth of wealth management, there exists a world known only to a select few, the secret investments of the rich. While most people are familiar with stocks, bonds, banks, and real estate, the truly wealthy have access to a whole other level of investment opportunities, mostly kept under wraps from the public eye. These investments offer the potential for big returns, but come with their own set of risks. So, what are these secret investments, and why aren't they common knowledge among everyday folk? Think of private equity as a members-only club for the rich. Instead of buying shares in companies that anyone can get their hands on, private equity investors get to invest in businesses that aren't listed on the stock exchange yet, if ever. It's like getting in on the ground floor of the next big thing before it becomes popular. Private equity firms pull money from rich individuals and big institutions to invest in promising companies, often with the goal of helping them grow and make a profit. While it's often seen as exclusive, there are ways for investors to participate indirectly through specialized funds. But it's important to be aware of the risks and conduct thorough research, due diligence, before diving in. Venture capital is the secret sauce behind many successful startups. It's all about investing in new and exciting companies in their early stages. These could be anything from tech startups to new food or fashion brands. What makes venture capital special is that it's not just about giving money. Venture capitalists also frequently provide advice and support to help these startups succeed. It's a bit like being a fairy godparent for budding entrepreneurs, except instead of granting wishes, you're helping dreams come true. Let's say there's a team of entrepreneurs with a great idea for a fitness app. They need money to develop it further and launch it big. A venture capital firm likes their idea and invests millions in their startup. With this money, the team hires more people, improves the app, and markets it widely. The app becomes a hit, attracting millions of users and making lots of money. Seeing the success, a big tech company buys the startup. Both the entrepreneurs and the venture capital firm which put up the money make a sizable profit from the sale. In short, venture capital helps turn a small startup into a big success story, benefiting everyone involved. Then there are hedge funds, which are like magicians of the financial world. They use all sorts of tricks and techniques to make money. Unlike regular investment funds, hedge funds can try out all kinds of fancy strategies that aren't available to the average investor. They might bet on stocks going down instead of up, or borrow money to make bigger bets. It's certainly risky, but when it works, it can lead to big profits. However, because hedge funds play by their own rules, they're not open to everyone. How does this work? Well, hedge funds offer diverse investment strategies, allowing investors to bet on market trends, trade the debt of troubled companies, or use complex mathematical models. As mentioned, they can borrow money to amplify profits through leverage, but this also increases the risk of losses. Hedge funds typically charge both a management fee, a percentage of assets, and a performance fee, a cut of profits, making them more expensive than traditional investments. Access to hedge funds is usually limited to wealthy investors due to their complexity and level of risk. Real estate syndications, investing in properties. Ever dreamt of owning a fancy apartment building or a bustling shopping mall? Real estate syndications make that dream a reality without the hassle of being a landlord. These investments pool money from people to buy and manage big properties. You get to enjoy the benefits of owning real estate, such as rental income and property appreciation, without having to deal with the day-to-day headaches. How does this work? Let's say you want to invest in real estate, but don't have enough money to buy a property on your own. Real estate syndications offer a solution. You join a group led by an experienced developer who finds a promising apartment building. Together, you and the other investors pool your money to buy the property. The developer manages everything, from renting out the units to handling repairs. Over time, the property generates rental income, and when it's sold, you get a share of the profits from the increase in equity based on your investment. Real estate syndication lets you invest in big properties even with a relatively small amount of money. Bitcoin, Ethereum, and other cryptocurrencies are the cool new kids on the block. They're digital currencies that exist only online and have been making waves in the financial world over recent years. For example, Bitcoin's success can be attributed to its innovative technology and decentralized nature. As the first cryptocurrency, Bitcoin introduced the concept of digital money that operates independently of governments and traditional financial institutions. Its limited supply, built-in scarcity, and transparent blockchain technology have attracted investors seeking a hedge against inflation and a store of value. Additionally, Bitcoin's growing acceptance among mainstream businesses and financial institutions has contributed to its widespread adoption and increasing value, making it one of the most successful digital assets to date. Some people see cryptocurrencies as the future of money, while others think they're just a passing fad. Either way, they've caught the attention of the rich, who see them as a way to make big profits, often quite quickly. However, like any new technology, they are particularly volatile and so come with their own set of risks. You might wonder why these secret investments aren't common knowledge. The truth is, they're simply not suitable as investments for everyone. Many of them require a lot of money to get started, and they can be pretty complicated. Plus, they often come with risks that an average person might not be comfortable with. So while the rich might be able to handle these investments, they're not necessarily the best option for everyone else. They're not actually secret, but, as explained, are rarely accessible to the average person. The secret investments of the rich offer a tantalizing glimpse into the world of wealth and opportunity. From private equity and venture capital to hedge funds and cryptocurrency, these alternative investment options promise big returns for those in the know. However, they also come with risks and barriers to entry that make them inaccessible to the average investor. While the rich may thrive in this largely hidden realm of finance, it's essential to remember that there are plenty of other investment options out there for everyone else. So don't be discouraged if you're not part of the elite club. There are still plenty of ways to grow your wealth and so secure your financial future without the increased levels of risk described above. Thank you for spending some time with us. Make sure to like and subscribe so you never miss another video. We also handpick these videos, which we recommend you watch next. You can talk to us on all social medias or ask a question in the comments below. Thank you for being with us, and we'll see you back tomorrow.